Welcome to the Special Purpose Acquisition Company webinar. This joint inaugural webinar is presented to you by the Asian Member Institutes of the International Association of Financial Executives Institutes, also known as EFA, which are the following: Cambodia Association of Chief Financial Officers, China Association of Chief Financial Officers, Financial Executives Institute of Chinese Taiwan, Indonesia Financial Executive Association, Japan Association for Chief Financial Officers, Financial Executives Institute of the Philippines, and Vietnam Chief Financial Officers Club. Listen to experts from the region about the special purpose acquisition companies. Before we start the webinar, let me just inform you of the house rules. To ensure the highest quality of experience, kindly keep your mic muted at all times. Questions should be submitted via the Q&A button, and the selection will be filtered by the moderator during the open forum. This session is being recorded and will be available online via the FINEX Philippines Facebook page and the FINEX Philippines YouTube channel. Without further ado, let us welcome the Area President for Asia of EFA and the Executive Director of NIFCO Inc., Mr. Titomo Mainari, for his opening remarks.
Good morning, everyone participating from Asia and participant in North America and Mexico, Canada. Good evening. I'm Titomo Mainari, Area President. A pleasant day to all of you and welcome to the first webinar organized by Asian CFO organizations, CFO Cambodia, CFO of China, FEAI, Chinese Taiwan, IAFEI of Indonesia, CFO of Japan, FINEX of the Philippines, and CFO Vietnam. The recent Deloitte report entitled The Rise of SPAC in Asia, released in June 2021, in some cited, although special purpose acquisition companies, SPACs, have been used as alternative investment vehicles in the United States of America, US, for decades. They have recently gained popularity as seasoned investors and management teams sought to mitigate the increased market volatility risk associated with traditional initial public offerings, IPOs. Indeed, 2021 has been a record-breaking year for US SPAC IPOs, with first quarter proceeds already exceeding those raised in 2020. This surge has been fueled by the entry of prominent investors and management teams into the SPAC space, as well as an abundance of universal capital that had largely been sitting on the sideline in 2020. There has been a significant increase in the number of companies in China and throughout Asia, considering a similar route to the US capital market, as investors and management teams seek to mitigate some of the challenges associated with traditional US IPOs, particularly market volatility and the significant investment of management time and money. Given recent market development in US SPAC listings and potential mergers and acquisition opportunities in the Asian Pacific region, both the Hong Kong Stock Exchange and the Singapore Exchange have been growing market interest in introducing SPAC into their capital market. With this backdrop, the Asian CFO organization decided to keep all of us understand more about SPAC through this webinar. Let us learn from our resource speakers and actively participate in exchange of queries and answers. Thank you very much.
Thank you, Mr. Manori. Our first speaker is the 2007 FINEX president and an independent director for First Metro Securities Brokerage Inc. Philippines, Attorney Abelardo V. Cortez.
Good morning. I'm Billy Cortez from IAFEI and FINEX. I will be the first speaker for today's webinar, which will dwell on the topic of Special Purpose Acquisition Corporation. As you probably all by now, that SPAC, as it is called, is taking Wall Street and other capital markets by storm. Next slide, please. What is a SPAC? But before I do so, you can take a look at the graph. I hope it's clear enough. You could see the upward trend of the SPAC in terms of volume. Next slide, please. The second slide indicates the number of SPAC IPOs. In fact, 2020, they call it the boom year of the SPAC, because if you look at 2020, 83.3 billion through 248 SPACs were issued. So it was the tipping point. You know, SPAC has been around since early 2003, but it's only in the last couple of years that they have taken off, especially in 2020. Next slide. And in fact, according to the US, now what is a SPAC? Well, according to the US Securities and Exchange Commission, a SPAC is created specifically to pool funds in order to finance a merger or acquisition opportunity within a set time frame. The opportunity usually has yet to be identified. As I said earlier, SPACs in 2020 raised a record of $82 billion, a period that they now call the blank check boom. Now, at the pain of being repetitious, a SPAC is essentially a shell company. It is called the blank check company because it doesn't have any actual operation. Instead, the company is merely created for the purpose of taking a private company public. Next slide, please. This SPAC may indicate in the IPO prospectus, in its IPO prospectus, that it intends to acquire a business within a certain industry or market, although it is not obligated to follow through on that statement. But when the SPAC acquires its target company, defined as a fully operating private company, the two entities may combine within the SPAC and emerge as a publicly listed company. And SPACs, as we all know, have become a preferred way for many experienced management teams and sponsors nowadays, who would like to take companies public. Subsequently, an operating company can merge with or be acquired by a publicly traded company. And SPAC therefore becomes a listed company in lieu of going to its own IPO. Let me make it clear. SPAC raises money via an internal public offering. Typically, the cash raise will come from sponsors or founders, as well as outside investors, could be individuals or institutionals. The initial sponsors usually receive a higher stake in SPAC relative to the amount they invest. These investors will usually purchase both ordinary shares and warrants that allow them to buy further shares of SPAC at favorable prices, especially when the identity of the target company is already known. The cash raised is safely invested in government securities. Then the value of the shares and the warrant would usually trade at close to their launch price if early shareholders believe that management has identified an attractive acquisition target. Once a target company is found, shareholders, as I said earlier, must be furnished with financial details of the target company, and then they will eventually vote on the acquisition. If they approve, fine. But if the target company costs more than the initial money raised, further funds may be raised. However, if no target company is found or none approved by the SPAC shareholders, the vehicle is unwound and the money will be returned to the initial investors. The SPAC usually changes its name to that of the targets when there was already an arrangement, an acquisition, or a merger. So effectively, the private company has reversed into the cash shell and gained its public listing. Formed initially by experienced management team, normally 3 or 4, and some institutional sponsors, typically having 20% interest or founding shares, while 80% will be held by public shareholders through units offered in an IPO SPAC shares. 1 unit is a share of common stock. As I said earlier, if SPAC requires additional funds to complete the acquisition, the SPAC may issue debt or additional shares such as private investment in public equity. You know, they usually do this within a certain time frame. SPAC has 24 months to acquire or merge with target company. In case they will not be able to do so, all the money initially invested, including the interest earnings, will be returned to investors. Next slide, please. You know, after the post-acquisition, sponsors, particularly the management sponsors, they will usually get 2% of SPAC's value, plus reimbursable for administration, as well as any profit from the sale of shares. However, owners of privately held company that also invested or acquired company will gain in terms of increased price of shares, and eventually we can say they save a lot of money, because if they go through the usual IPO, you and I know that it costs a lot of money. You pay a lot of cost to lawyers, investment bankers, research team, and so forth. So compared with the traditional IPO process, going through SPAC is a lot cheaper, faster, and easier. What about the other institutional investors? Oh, they make money. The hedge funds and trust departments or trust companies, they make money because when they put in the shares, those shares will increase in price, probably as long as the target company is something that is so attractive that the general public will also support its stock price. At the end of the day, what you can say is that the stock market gets a listing that has a clean slate. Next slide, please. I guess that's all I can say, but let me put it this way. The world of finance is evolving. The financial landscape is changing. The capital markets, particularly in US as well as in Europe, are beginning to feel this year the reverberations of SPAC. And in fact, many more companies are putting up SPACs. Many more individual management teams are putting up SPACs. Very recently, Singapore has come up with some guidelines because SPAC will be introduced in its capital market. Well, as I said earlier, this is the faster, the easier way to get listed. I think that's all I can say. May I put it this way, to all those who are listening, to all those others who are not members of the groups but are listening from other places, may I put it this way, may your understanding of the SPAC lead you to new, better opportunities for yourselves as well as for others in creating wealth. Thank you.
Thank you, Mr. Cortez. We will now go to our second speaker. He is a partner at Seraph Group and the chairman of FEI Chinese Taiwan, Mr. David Chow.
Dear leaders and executives of IAFEI institutes, honorable guests, VIP moderators, and speakers today, I'm David Chow, chairman of Financial Executives Institute Chinese Taiwan and partner of Seraph Group in the Silicon Valley. It is my honor today to share my experiences regarding SPAC since 2002. Today, my presentation will have 5 parts. First, very briefly about myself. I have conducting cross-border transactions of investment, including venture capital, private equity, and angel investment, and investment banking, merger acquisition, listing, funding, business facilitation. For the past 25 years, I have completed over 50 cross-border transactions with a total amount of $7 billion US. And I have served as financial and strategic consultant for over 300 companies in Asia, Americas, and Europe. I have also evaluated over 3,000 deals, including Alibaba. I graduated from Columbia Business School in '95. And I do have extensive Asian and international networks. In my Outlook address book, I have over 31,000 people there because I do, as I mentioned, I conducted cross-border and cross-sector transactions. I do need expertise in different sectors in different countries. That's why I keep my database big. These are the transactions I have completed. As you can see here, Auto China SPAC listing, which I will elaborate a little bit later. And these are the VCP and angel investment I have conducted, including Alibaba. My previous fund was the first ever investor back in April '99. And others, I have several other deals with over 30 times returns. For merger acquisitions, I have been helping companies in Japan, Taiwan, Sweden, China, US, and other countries for M&A. And I also help over 10 VCP and angel funds for their funding and establishment. For business facilitation, I help companies not in Greater China looking for their counterparties in Greater China, such as suppliers, buyer, channel, OEM agent, and vice versa. I have been serving at Financial Executives Institute Chinese Taiwan for over 19 years, 15 years as Secretary General and 4 years as Chairman. And I'm a partner of Seraph Group in the Silicon Valley, world's largest structured angel fund group with 11 funds and over 120 portfolio companies. Several of them are unicorns. And we have over 400 elite investors, such as AT&T Chairman, Visa CEO, G Healthcare CEO, Apple QuickTime founder. And those investors not only contribute capitals, but also deal sourcing, evaluation, and post-management. That's why our success rate has been very high. 62% versus the average of 11% in the Silicon Valley. And our portfolio companies, their follow-on round has been invested by many reputable investors, such as Intel, Bill Gates Foundation, Alibaba, GSK, Pfizer, Merck, and those are some certain companies with decent returns. This is the first ever investment we made in Asia, which conduct cross-border payments legally, safely, quicker, and much cheaper. And for those who are interested, you may contact me after the webinar. And the investors also include SoftBank. And I'm also the Taiwan rep of SR International, which was founded by Stanford University in 1946. And SR International is an R&D and commercialization institute. And I do have other titles here. And these are topics and expertise I'm good at. So in conclusion, I have been conducting cross-border transactions and resources integration. And then talk about the case studies of SPAC. The first time I interacted with SPAC was back to 2002, 19 years ago. My previous fund was, offer very good valuation to a target company. We thought we are going to win. However, we lost. And the winner was a SPAC with 2 months remain. And they offer ridiculously high valuation because it will be troublesome and shameful if they were not able to complete the transaction. So timing will be something important for a SPAC, which I will elaborate a little bit later. And the second case is about Indochina. The target was the largest truck dealership and financing company in northern China, acquired by SPAC and renamed as Indochina. The company went well for several years. However, its chairman and CEO were detained because of legal troubles. So here comes the criticism or the drawback of SPAC is about the corporate governance and transparency. And another case is the Pinta Marine, which is the largest ocean shipping fishing company in China, acquired by SPAC and renamed as Pinta Marine. However, the share price were a disaster. And again, it's because of the corporate governance and transparency issue. So from 3 cases above, we can see actually, for the unlisted companies, they are pros. To go through SPAC for listing, it's quicker and lower disclosure and lower cost. And for those countries with high restrictions on listing or with quotas, then SPAC will be an ideal solution. And underwriters usually they tend to underprice IPO price, but for SPAC actually there is no concern about that. Actually, as I mentioned, there are 100 SPACs right now in the market and they are hungry for deals. So the valuation for acquisition should be high. But on the con side, transparency, again, corporate governance, and there will be conflicts between sponsors, which are the founders of SPAC, and business owner of the target company. So from the unlisted company's perspective, there are 3 approaches to go IPO, to go listing, which are IPO, SPAC, and shell listing. And in terms of regulation disclosure, IPO is the highest, SPAC is low, shell listing is low as well. And IPO will take a long time, SPAC is the quickest. Short listing, well, you need to buy a share first, and then another transaction for the acquisition. So it's a little bit longer. For cost, IPO is pretty high, especially in the US, like 5% to 7%. For Uber, the underwriting fee was over 100 million US dollars. And for SPAC, which is very low, for short listing, you need to buy a share. So for the risks is, what if, go through IPO, the company is not qualified? And for SPAC, actually, as long as the company is good and there's no issue, as mentioned, there are hundreds of SPACs out there in the market. And for short listing, the biggest concern is about whether the share is dirty or not. So for investors' perspective, pay attention to sponsors' reputation, track records, transparency, corporate governance again. And the most important thing is the business fundamentals. Do not speculate. And it's important to find sufficient and reliable information source. And the orphan stock issue, which I will elaborate soon. So there are several consideration factors for listing, about where to list, your home exchange, USA, Hong Kong, Singapore, London, other places, and each exchange has its pros and cons. And it's like marriage. It's not to find the best one. It's to find the most suitable one. So there are several, consideration factors, and everything, every deal is case by case. And if you want to go through the SPAC for listing, then how to select the SPAC and how to deal with SPAC is there are several, consideration factors. If you want to go through the IPO, then how to select the underwriter, will also be a task. And either way, you have to hire professional firms such as accountants, lawyers, and appraisers, and you also need to integrate opinions from them. And it's better to hire a decent and experienced investment banker to help you, and not only to integrate, but also for the execution process, monitoring and control. I mean, for timing, and for others, for pricing and others. According to Wall Street Journal, in the past 30 years, those companies hired decent investment bankers enjoy averagely 30% higher selling prices than those do not. So, I mean, it's better to hire someone experienced to help you. About the listing, exchange selection, and also the orphan stock, let me elaborate here. Here's a company based in Asia, which is the world's 5th largest semiconductor packaging and testing group. And they were listed in the US, suffered from very low PE, only 5 times, because F1 filing, time difference, CFO was incapable, a small underwriter, no listing comparable, and other factors. So I suggest a company they listed from US and relisted in Asia. And right now they enjoy 18 times PER in Asia. So listing exchange matters. So the conclusion is, for unlisted companies, listing through direct IPO, SPAC, or buying shell have their respective pros and cons. And for investors, business fundamentals are still the most important factors, and avoid orphan stock. There are a lot of listing consideration factors. Better to hire a decent investment banker with track records and international networks. And those who hire, the decent investment bankers enjoy 30% higher selling prices. So here I conclude my speech today. Thank you very much for your time. Please ask me any question in the Q&A session later on. Thank you.
Thank you, Mr. Chow. And now to our last speaker. He is a managing partner at Indochina Counsel, Ho Chi Minh, Vietnam. Mr. Duc Thay Dang.
Morning, everyone. Thank you very much, IAFEI, International Association of Financial Executive Institute, and CFO Vietnam for inviting me to speak on this webinar on SPAC. So for my presentation, I would like to share from Vietnamese perspective. We focus on my practice as a corporate lawyer and M&A lawyer for related issue for SPAC transaction for Vietnamese company. So start with my presentation. Let me share my slide. So my fellow speaker, Mr. Cortez and Mr. David Cho already mentioned to you, I think quite a lot of detail for SPAC transaction and financial issue, etc. So for my presentation, I would like to focus on three parts. The first one is the overview of the certain SPAC transaction in Vietnam. And the second are the key consideration or issue for SPAC transaction for Vietnamese company. And the last one, I would mention about certain challenge Vietnamese company would face for SPAC and IPO. So for SPAC now in Vietnam, so as you know that this is hot topic all over the world and in Asia. And it's also talk a lot in Vietnam now, but actually not so many Vietnamese firms have conducted this transaction. So here I listed a few part transaction as I know from public sources, and some proposed SPAC transactions that now Vietnamese company plan to do. For the part transaction here, we have two projects conducted earlier, I think long ago, between 2006 and 2009. The first one is the Cavico mining, and the second one is Chai Thien street transport. But for this transaction, actually, they are not exactly like a SPAC as it is today, but actually, all of these two transactions are reverse merger or backdoor listing. And both Cavico mining and Chai Thien transportation, they proceeded with the reverse takeover, and then they get the US entity listed in Pink Sheet and over-the-counter bulletin board back in 2008 and 2009. For the case of Cavico mining, so they was then listed in NASDAQ in 2009, but in 2011, the entity was delisted from NASDAQ due to violation of disclosure requirement. And now with the SPAC trend in the world, so a few companies in Vietnam consider for SPAC transaction. The first one is VinFast LLC. There is an automotive unit of Vin Group. It's a big private property group in Vietnam. So now they expand to automobile, to technology area. And they target to get listed in New York Stock Exchange with the targeted capital raise around 2 billion. And as a public media reported, the expected valuation of the listing is between 50 billion to 60 billion US dollar. The second company considered for SPAC is a VNG, or Vina Game Software as a stock company. This is the first unicorn in Vietnam. So they are one of the top tech company in Vietnam in online game, music streaming, messaging application, payment solution, and related services. So they also target to get listed in NASDAQ, and the expected value after listing is between 2 billion to 3 billion. And the third case, actually this case is not exactly SPAC, but I think it's good for reference as alternative channel for listing abroad. That is Tiki stock company. Tiki is one of the top 5 e-commerce company in Vietnam. And actually they have a setup in May this year, a Singapore company called Tiki Global. And in July this year, Tiki Global have completed acquisition more than 90% of the share in Tiki in Vietnam. So they plan to do IPO in Singapore with Singapore entity Tiki Global. And now we come to the key consideration or issue for SPAC transaction for Vietnamese company. So for this section, I will follow basically 2 transactions related to the business combination as the result of the SPAC transaction. The first transaction is for SPAC to acquire a Vietnamese target company. And the second would be for Vietnamese promoter, shareholder of a Vietnamese target company to acquire and hold share in SPAC. So for the first transaction, so for SPAC to acquire a target Vietnamese company for business combination, so this present a certain regulatory and legal issue that SPAC as a foreign investor should be aware of. The first one is foreign investment restriction under the law of Vietnam. So as you know that we have the new investment law, 2020 investment law. And for this new law, so it provides for the negative list approach for foreign investor investing and doing business in Vietnam. So this new law provides much more clarity for foreign investor in terms of market asset condition for market entry in Vietnam. So with this negative list approach, basically for business sector, if this sector of the target not included in the list of restricted sector for foreign investor, so all of foreign investors are entitled to the same market asset condition applicable to domestic investor. So the new investment law provides for very clear and specific list of restricted sector. So this list includes 2 sublists. One is a list of prohibited sector for foreign investor and the list of conditional sector. So of course, for prohibited sector like press, overseas contracted employment, agency, tourism service, except for inbound international travel. So SPAC as a foreign investor is not allowed to acquire a Vietnamese target company. And for the list of conditional sector, SPAC as a foreign investor must meet certain market asset conditions in order to acquire a Vietnamese target company. If they work or they operate in the list of conditional sector. So certain conditional sector include like insurance, banking, security, telecom, real estate, logistics, service. So market asset condition applicable to foreign investor like a SPAC would be in the form of foreign ownership limit, investment form like conditional joint venture form, investment scope, investment capacity. and also some other technical barrier depending on specific sector. So for foreign ownership limit, so foreign ownership limit would be imposed for those Vietnamese companies operating in the sector that fall in the lead of conditional sector, as I mentioned earlier. And in the case that any international treaty that Vietnam is a member or Vietnamese local law provide for a specific foreign ownership limit. So for these two cases, so foreign ownership limit would be imposed. So for any foreign investor for acquiring Vietnamese local companies, so we need to check both international treaty and local Vietnamese law to determine what is foreign investment restriction, especially foreign ownership limit. And the new law now provides for very clear principle that if the business sector of the target company fall in the lead of conditional sector, but there is not any specific foreign ownership limit provided by an international treaty or local Vietnamese law. So for a private company or non-public company, there is not any foreign ownership limit apply. And for public and listed companies, so the foreign ownership limit would be kept at 50% of the charter capital of the target. And here I list certain specific foreign ownership limit for certain sector from Vietnam commitment to WTO. And the key principle for applying foreign ownership rule. So because this, I would not go into much detail about this. And the next is what are the key procedure and license approval for SPAC to acquire a Vietnamese company? There is the key corporate license and approval. The first one is M&A approval. If SPAC acquires share in a Vietnamese target company, so it have to obtain M&A approval. If the acquisition leads to increase in the foreign ownership in the target company in the list of conditional sector. The second case is that if the acquisition lead to increase in foreign ownership in the target from less than 51% to more than 51% of the charter capital. And the third case is the acquisition lead to the increase in foreign ownership in the target company where foreign ownership already exceeds 51% of its charter capital. The next regulatory requirements that a foreign investor like a SPAC have to proceed is to open a special investment account for the acquisition in Vietnam at a commercial bank here in Vietnam. So there is two types of capital account here. One is direct investment account, direct investment capital account, DICA, if more than 51% of the starter capital of the target is acquired. The second type of the account is indirect investment capital account, if less than 51% of the starter capital of the target is acquired. The next key license the SPAC have to obtain is amendment of the enterprise registration certificate, ERC. That means amended ERC is required to obtain to record the increased charter capital, to record the chain name of the target company or its legal representative, or change the member or owner of the target company if the target is a private limited company as a result of the acquisition. So for this case, if acquisition result in these changes, so an amended ERC would be required to be obtained. And another procedure, the target would have to do is to submit a notice of a foreign shareholder to the business register to record SPAC as a foreign shareholder. Apart from the above, the key corporate license and approval, there are also certain other regulatory procedure and approval as required by specialized law in Vietnam. The first one is that the security law would apply for the acquisition of the share or stake in a public company. So of course, for this, if the target is a public company, so the party of the transaction have to follow the security rule, like open indirect investment capital account at a depository bank in Vietnam, obtain a security trading code from VSD, open a security custodian account at a custodian bank. And another very important and new regulatory requirement from the competition law in Vietnam is merger filing. So now, from with this new requirements, a lot of M&A deal or transaction in Vietnam are subject to this merger filing requirement. So the law now provides for merger filing threshold. The first one is total asset in Vietnam, 3,000 million Vietnamese dong, or equal to 130 million US dollar. The second is the total sale turnover or purchase cost in Vietnam, also 3,000 million Vietnamese dong. The third is the transaction value of the acquisition. If it reached 1,000 million Vietnamese dong, or equal to around 43 million US dollar. The last one is that the combined market share as the result of the proposed merger or acquisition is 20%. So for this case, the party have to proceed with merger filing or notification on economic concentration. So regulator here is National Competition Commission, attached to Vietnam Competition and Consumer Authority, or we call VCCA. VCCA will conduct two-phase merger review process, preliminary and official appraisal. And the result from VCCA review would be in three forms: unconditional clearance, conditional clearance, or prohibited merger. And for the second transaction, when Vietnamese promoter or shareholder of the Vietnamese target company to acquire and hold share in SPAC. There are certain issues we need to be aware. Now, the Vietnamese law provide or categorize all outward investment activity into two categories. One is direct outward investment, and the second is indirect outward investment or portfolio investment. But in practice, the purchase or acquisition of share in a SPAC, a non-Vietnamese company, is treated in practice as a direct outward investment. So for direct outward investment, it would be classified as a purchase of share or stock in an offshore company to participate in management of that target, or simply establishment of an offshore company. So for any DOI activity, so the investor, that means here, Vietnamese promoter or shareholder of Vietnamese company have to obtain outward investment registration certificate from MPI, Ministry of Planning and Investment in Hanoi. And for this license, so normally the MPI will seek approval or support from a certain related authority like the State Bank of Vietnam, Ministry of Finance, Ministry of Security, or specialized ministry. And even for certain large-scale project or sensitive project, prior approval from Prime Minister or National Assembly would be required before MPI to issue outward investment license. So for outward direct outward investment license, so is the investor also have to follow strict foreign exchange control regulation, particularly an offshore investment capital account must open in Vietnam, and all outward and inward remittances must be done by this special capital account. And for this transaction, when Vietnamese promoter or shareholder of the Vietnamese target to acquire share in SPAC, so normally the party will proceed with capital stock or share swap between Vietnamese target and SPAC. But this remain an issue in Vietnam now, because for both transactions, the acquisition by SPAC or the acquisition by Vietnamese promoter or shareholder of Vietnamese target company to acquire share in SPAC, so foreign exchange control rule require for actual or real capital flow. But the local law do not recognize for share or non-cash transaction. So that means the party have to consider for the value or consideration of transaction to reconcile or something like that. And the last part of my presentation, I'm from challenge that Vietnamese company would pay for SPAC or IPO. I think the first one is, I think for local Vietnamese company, I think the most challenge for them is reporting and disclosure requirement or burden for them, because most of them may be not well prepared or ready for this. And the level of reporting and disclosure requirement in developed market as required by regulator is much more higher than in Vietnam. In certain area like financial reporting, disclosure, corporate governance, auditing, and accounting work. And also, like Mr. Cortez and Mr. Abelardo already shared with you, that the market regulator in other jurisdictions like US or Singapore have imposed much stricter rule on SPAC transaction and related reporting and disclosure requirement. So there is also, I think, the biggest challenge that the Vietnamese company would face. And for other challenge, this mostly from Vietnamese legal framework. I already mentioned earlier, like foreign ownership limit and market asset condition for foreign investor. The complicated and lengthy regulatory approval process for license and approval the party need to obtain for related transaction for business combination. Foreign exchange control regulation, very strict, as I mentioned earlier. So that is the end of my presentation, and thank you very much for your listening. And for the next Q&A section, I would be happy to take any question to share from my experience as a corporate and M&A lawyer. So thank you very much. Thank you.
Thank you, Mr. Dang. We will now have our open forum. May I now call on our moderator, Ms. Marilu C. Cristobal. She is the chairperson of Multinational Investment Bank Corporation, the Philippines' oldest existing independent investment house. Ms. Malu, the floor is yours.
Thank you, and good morning to everybody. Thank you, Billy, David, and Duke for your well thought out presentations and the wealth of information that you provided to us. Indeed, SPACs have been quite some time, but it's only the past 18 or 24 months that they have occupied center stage and have become a real hot button topic in the financial markets. The surge has been so great, and that was presented in Billy's graph, that it has caused a lot of people to ask this question. Are SPACs a fad, a mania? Will the luster fade soon enough? Or are they really the wave of the future? What we hope to do is be able to address this question before the end of the session. What I'd like to do is basically cover time permitting, the three key players in a SPAC, the investing public, the sponsor, and the target company. We'll try and weave in and out of these three players as we go along. Let me start by looking at the Philippine market, and let me toss this question to Billy. Billy, you are familiar with the rigorous process of registration of securities in the Philippines intended for a public offering. You know, we have very stringent rules that are meant in large part to protect what we call the widows and the orphans. Given the level of financial sophistication of the average Filipino investor, are we ready for SPACs? If not or not yet, what would you like to see to be comfortable about the public's investment in SPACs?
Whether we're ready, Malu, thank you for that. Whether we're ready, I'm not very sure of that. The public in general, because this kind of activity is rather sophisticated. In fact, our nation, in the country, the level of financial literacy on this matter is not that high. So maybe if SPAC comes into mainstream, maybe some people would go into that because it's basically easier than the usual IPO process, cheaper and easily to understand. And actually, the best thing about this is when there is a SPAC, it's basically a bet on the management, the sponsoring management, that they know what they're doing, that they can find a good target, and that they will do due diligence. Due diligence would include whether that company, practically like doing credit investigation, where that company is doing well, the target company, how is it, how does it stand within the industry that it operates. But basically, the first thing there is when somebody is investing in a SPAC, he must first look at the management team that is sponsoring it. Oh, by the way, the management team, the sponsor as well as the founders, they're the ones who can elect the board of directors.
Mm-hmm.
So at the end of the day, it's really when we get a higher level of financial literacy, maybe SPAC can easily be introduced in our country.
There's a question in the Q&A box, Billy, that is asking whether SPACs are allowed in the Philippines. I would imagine he's talking about doing a public offering in the Philippines. So it is safe to say that given our rules on offering to the public, that SPACs will require a regulation specific to SPACs in the Philippines. So presently, we can say that the regulations do not allow it.
Yes. Presently, there are not, but eventually when they will introduce it, like probably in Taiwan or probably in Vietnam and in the United States, you cannot start SPAC, especially at the American exchange, if you are not fully compliant with certain regulations.
Yes.
First of all, they will check whether you're Sarbanes-Oxley, you're fully compliant.
Yes,
Whether
yes,
you have
yes.
an existing or
it's not a free for all. You can't just go to the market and do your offering. There has to be specific regulation and strict compliance to the regulations. Thank you, Billy. I want to segue to another question, and I want to toss it to David. Billy mentioned betting on the management. And David, in a SPAC offering, as what Billy pointed out, one is betting on the persons, the sponsors, and not on the numbers presented by the issuer, as is in a traditional IPO. So Billy already mentioned a bit on what you need to look at, but can you elaborate on the kind of due diligence that one should make or exercise on a sponsor, and how different should this due diligence be compared to doing it on a traditional IPO?
Okay, thank you. Think and also very good speech by other speakers. Talking about due diligence, toward the sponsors is just like the due diligence, toward other deals. No difference. You have to look at their, their track records, their reputation, and others. And those people who are more famous or reputable with, a longer list of track records are easier to get, a higher amount of capital raised in the SPAC, offering. So, I mean, for people who are famous, it is easy to find information about them. So due diligence shouldn't be an issue. However, we have to say that whether their track records are really related to the SPAC is an issue. Because
there are celebrities in the US who are identified with SPAC. Shaquille O'Neal, some of the performers, and you did hit a very good point. It's not just a matter of being famous or being known, or it's got to be a relation.
Yeah, that's right. That's right.
The SPAC, yes.
Yeah, you get the point. So whether their reputation and track record are really related to the purpose of the SPAC is the focus.
And precisely because of that, should there be a higher level of disclosure that must be required of sponsors?
Well, actually, it depends on the market. If the market buys their idea and their reputation, they raise a lot of money. It's all decided by the market. Of course, I mean.
So you don't think that regulators should require a higher level of disclosure so that the investors do not fall prey into, effective voting on somebody that they hear about or see, but not necessarily be aware of in terms of what they bring into the SPAC? Okay.
Actually, there are two parts. The first part is upon the SPAC listing. And at that time, everything depends on the sponsor's reputation and track records. And the second one is when a SPAC, acquire a real business.
Yes, I will hold that part because I'd like to take that part later on, if you don't mind. I just want to kind of put a closure on this issue of disclosure and due diligence. Mm-hmm. So, insofar as the existing regulations are concerned in the US, for example, and Singapore, are you comfortable with the level of disclosure that is required of sponsors?
Upon SPAC listing, because there's nothing to disclose more other than the credentials and track records of the sponsors. So I think it's fine. And the most important thing, well, I cannot say the most important, but the equally important, factor is look at the business acquisition, which we will discuss later.
Okay, so in your mind, there are really two defenses for an investor. It's really looking at the sponsor and then subsequently looking at the target company. And there has to be rigor in the due diligence and decision making on both counts, because clearly in a SPAC, an investor can walk away, and redeem its investment in case if it chooses not to participate at the point of the merger. But of course, in the Philippines, we have a Filipino saying, but I'll translate it in English. It's sort of like, if you get wet on your ankle, you're more predisposed to get wet to your knees, meaning to say, once they're in it, there may be a predisposition to just stay in it. So there has to be, at the first stage, there has to be so much more rigor in doing that kind of due diligence and making a real studied decision making. Let me get to Duke because that brings me to a transaction that Duke presented in earlier, where he talked about Cavico, which was an acquisition by a SPAC, which after barely 2 years from listing in NASDAQ was delisted, presumably involuntarily, because they talked about, I guess, some certain non-disclosure, non-compliance. The listing hurts. It hurts the investor, it hurts the company. the liquidity of the shares is diminished, the company's reputation, gets tainted, its ability to go back to the market becomes more difficult, the value could be reduced significantly. Doc, can you talk about the lessons learned from this unfortunate incident? Could there have been things that could have been avoided or things that should have been done? Getting listed is difficult enough. And I think this was presented by David later on, when either you go IPO, you go Shell, or you go SPAC. Once you're there and you lose that listing, what are the lessons learned?
Actually, for a few transactions I mentioned earlier, and I have been involved in one or two, I think a similar SPAC as it is today. But I think that those Vietnamese companies, they conducted that reverse takeover or merger at that time. They look at like a channel to raise fund, and maybe a bit of fashion way at that time. But I think this company, they was not well prepared to meet much higher level of compliance and disclosure reporting requirement from US regulator. And of course, another factor apart from the other one you mentioned is that there was much higher cost of compliance.
Yes.
Apart from other factor like the business situation of the target company in Vietnam after the acquisition. So most of the case just due to that reason. Yeah, from my experience. Yeah.
I'm going to drill a little bit deeper into that failure to comply, and I want to ask Billy this. Billy, let's look at the Philippine experience bringing a company public, and we know that it takes time, and we do a lot of prepping or preparation. The company that is being prepared to go public does, a corporate. Typically, they do a corporate restructuring, they do reorganization. Oftentimes, they change auditors in favor of, the big auditors. They settle their tax issues. They bring in independent directors. They follow certain procedures. And as I said, oftentimes this could cover a couple of years. In a SPAC acquisition, a lot of the transactions are completed in a matter of months. My question, therefore, is the readiness of the acquired company not compromised? The readiness to become a publicly listed company not compromised, given the limited time that is really that is captured to be to complete it and then bring them to a totally different arena. How do you address this problem in a SPAC?
Basically, Malu, there is this thing that's timeline. I mean, the sponsors are given to work on this within a certain time frame. And
yes.
Target company or the soon to be acquired target company, they realize that.
Yes.
That there's a timeline. They have to work on that. If they fail to do that, they can ask for an extension, maybe another 12 months. But that's it. If you can do it, SEC or the regulatory body will say, stop, don't go, break up everything, return the money, which earned some interest while it was placed in a trust fund. Return the money to the investors. So the one could just wait and see if they could really come up. Because as I said, the whole thing starts with a bet on that management group.
Yes, yes.
Guys, because he may not be Shaquille O'Neal, but at least he knows what he's going to do. Maybe he's familiar with the business, with the particular industry category. But of course, they add some names. It helps that Shaquille O'Neal was also part because he has a lot of money, so he could take a chance. But the bet is really on the management. Then the
You
management,
still go back. You still go
they have
back to
done their job,
management.
doing due diligence.
Yes, yes. Okay, thank you. Let me toss this question to David. You're familiar with the structure of the SPAC and the fact that, and you mentioned this, it's really a blank check. And so there have been suggestions, and I've been reading about it, that that have been brought forward, essentially saying that sponsors should be required to provide a broad investment plan in order to prevent the investor from making a decision on pure blind faith. Do you agree with this suggestion that that sponsors should provide a broad investment plan, or does this go against the very character of a SPAC?
Okay, well, it's a great question. Well, there have been, discussions not only now but also for the past 20 years whether, in the IPO prospectus of the SPAC, whether they should list the deals they want to invest. And so far, the answer is no. I mean, based on the regulation, because there could be certain, confidential information disclosure issue or conflicts of interest or others. And well, I still think, it's a market-driven, issue. And as long as the market is fine with it, well, yeah, then we stick to the, the current regulation requirements. But if there's any like scandal or whatsoever, and the regulator want to step in, then they will require, the future SPAC listing to disclose more information.
I want to interject. Sorry, David. I just need to bring this in so that you're able to, I guess, cover it from a broader perspective.
Okay.
We talk about, you were mentioning regulation and when the regulators have to step in, and currently, from our understanding, there is very limited regulation covering the SPACs, and in certain cases. I was looking at the U.S. numbers, and I don't know if Billy was able to present this, that about 75 billion has already been lost in terms of the value of the acquired companies over the past so many months, and that many of these companies, well, the value of the shares of these companies have dropped below the offer price. And I'm looking at it from the point of view of regulation in terms of possibly the overhyping when the target companies presented to the investors, or perhaps a lack of material disclosure. And I want to find out from you what you think is the Goldilocks approach, meaning where do you find the balance between under-regulation, which would spawn abuse, and over-regulation, which we market players do not want, because it could stifle innovation and growth. So what kind of regulation are you comfortable with?
Well, so far, the SPAC has been evolving. It was started in the US, but now, UK, Singapore, Netherlands, or even Hong Kong want to also have the SPAC. So again, I think it depends on the market, and you really, the investor really have to look into the track records of the sponsor, because the sponsor, whether it has very good reputation in terms of transparency, corporate governance or not, will matter about the amount raised and also the valuation of the SPAC. And don't forget that SPAC is a listed company, so the investor can sell their shares at any time. And the important thing is whether the investor can get certain, reliable information source, better than others. So well, although in the prospectus, it is not allowed to list the deals. But for the market, actually, you can still get some information. But whether that information is reliable and is another issue that investors should look into. So I don't have, the clear answer for your question. Sorry.
But let me go deeper into this issue about the sponsor. Yeah. In such cases where there was overhyping or lack of disclosure and something goes wrong, and the investors, basically they lose their shirt or they suffer a diminution in their net worth, and the company could potentially also suffer as a consequence of that.
Okay.
How should sponsors be punished? Or should they have a certain level of liability? Is there a safe harbor protection for sponsors, or should they assume a certain liability precisely because so much is on their shoulder, that the vote of confidence is really on them because there is no track record of the company that is being presented at the very onset?
Okay. Actually, there are two measures, to punish the sponsor. Okay. The first one is on the market side. The sponsor with bad track record and reputation, will not be able to have another SPAC. That's the first one. The second one is on the regulation side. If the sponsor have any fiduciary duty or crime matters or whatsoever, so the investors can sue them, and also SEC or other government agencies can also sue them, like sue other normal listed companies.
I understand in the US there are a lot of lawsuits already.
Yeah, that's right. That's right.
Yes.
And you are right. According to the the general survey and the studies, SPAC companies tend to after the merger tend to underperform the market. So that back to my earlier warning, corporate governance and disclosure really matters.
I want to go to Duke here. There's, of course, the mention about the limited timeline. You have 24 months generally to complete a merger. And there was a point raised by David about his actual experience where they lost to a SPAC, which I guess offered an valuation that was too good to resist. And what I'd like to find out, Duke, is what your thoughts are to mitigate the risk of the sponsor doing a haphazard buzzer-beating shot. We call that, I think, a Hail Mary shot, where at that point, either you overpay to be able to get a deal done, or you settle for a low-quality company, which either way is inimical to the interest of the investor, just so they could, because clearly a sponsor stands to lose his sponsor share, which he hasn't really paid for significantly anyway. So how do you mitigate that risk? Can you? There you are.
Actually, I think this question, David can answer best than me, because the experience in the jurisdiction where they recognize SPAC. But from my experience advising Vietnamese companies, so I think like David mentioned, it depends a lot of the reputation, track record, and transparency of the sponsor. Because I think for a few deals I have been involved, one has been successful for listing, but two others, I think they fail on the road to listing, because they select, I think, a wrong sponsor, or some they was too eager to close the deal, and that means a lot of issues from the religion, timing, etc. So that means later on, the combined entity listed, I think they are not of good quality, and later on they could not meet the much higher standard from regulator for listing. So I think selection of the good sponsor is very important for SPAC transaction. I think, especially for the emerging market like Vietnam, because
sorry, I'm interrupting you here, and I apologize. But now that you mentioned Vietnam, can you discuss very briefly how Vietnamese private companies are they welcoming of SPACs, and what is the most compelling proposition of the SPACs to the Vietnamese private companies?
I think for Vietnamese company, I think a few sector I think they are I think advantages of SPAC compared with traditional IPO, because some like other speaker mentioned about timing, about the cost, and there is a few Vietnamese company now, they consider SPAC because that is a good way for them to access to the capital pool international. Why it is limited in Vietnam. But in practice, I don't think that there will a lot of Vietnamese company can be qualified or capable or ready to do SPAC. But there's a few, especially for very for private growing company with a track record for good corporate governance. They are familiar with IAFEI, International Financial Reporting Standard, because like you know, not like Philippines or other jurisdiction in Southeast Asia like Singapore or Malaysia. We have not made it mandatory for application of International Financial Reporting Standard for public company now, but the roadmap from the government is this will be done, I think, by the end of next year at the soonest. So except for major company, big company or very good technology companies, they prefer SPAC. Majority of other local Vietnamese companies, I don't think they are ready or capable from the management team, from corporate governance, etc. Auditing, accounting, etc. to meet very high standard, even for SPAC, not to mention about traditional IPO in developed jurisdiction like US, Singapore, or Hong Kong. And for Vietnam, we also, from regulatory framework, we do not have a regime for collaboration with developed stock exchange like from Singapore, from Japan. There is one or two, but I think it's very limited. So I think SPAC could be provide a very good alternative channel for good company to go for fundraising in international financial market. If they have a good project, if they have a good asset, yes, and they can bring that to the potential investor, like the 2K I mentioned about, like a VinFast, even a very new automotive unit from Win Group. But yeah, they can do that. And VNG is very good technology company, so I think they are familiar with international standard. And I think it's a good way for them to do that. And I believe they can do like the big guy like VNG. Yeah.
Thank you. I do have a number of questions in the Q&A, but before I go to the questions here, let me just have a very quick question for David. David, is it correct to say that the interest of the sponsor, the investor, and the target company are not exactly closely aligned, or are in fact misaligned? There's an observation that sponsors have a much shorter orientation, that they're actually, we call them flippers, that they don't intend to stay long, but are quick to realize the value of their investments and the gains as soon as feasible. On the other hand, you have, of course, the business owners and the the investing public, which might have a longer term orientation. So how do you address this apparent misalignment in the interest of these critical players in SPAC?
Wow, that's a very, very insightful question. And thank you. Well, you are right. Actually, it's not really, fully aligned. And as I mentioned, I interacted with SPAC back to 2002. And when my fund offered, 10 times EV/EBITDA, it was pretty high. But the SPAC offered twice that valuation.
Yes.
And why? Because that SPAC had only 2 months remaining. And they offered this kind of, ridiculously high price, in the sake of the sponsor, not the investor.
Mm-hmm. Mm-hmm.
So really the interest is not aligned. So the investor should be very, very careful about the time remain.
Yes.
Of the SPAC, of course.
Yes.
And also, the investor and the sponsor of the SPAC, of course, want to buy the business at lower valuation.
Yes.
However, on the other side, the business owner want to sell their
highest possible value.
Sell the business at higher valuation.
Yes.
So it's a bargain. It's a bargaining game. And so, as you mentioned, the interests are not really aligned.
And that is where the investment banker comes into play, when he tries to find the best possible optimum terms that would have a much more strategic rather than tactical value to the players. Right. Okay, let me run through the questions here. Is the US SEC scrutiny on the SPACs rising? Short and sweet, who can answer this? Is the scrutiny of the US SEC becoming more stringent? Is anybody on top of what's happening with the US regulator? David?
Okay, allow me to.
We'll do it short and sweet.
First. We have actually three experts here, including the moderator. Well, the US, the SPAC, is really hot right now, and 2/3 of IPOs are relating to SPACs. Well, I cannot say IPO, I should say listing. So US SEC, really, watch SPAC closely, and if there's any scandal or whatsoever, I think they will take some actions.
Yes.
Toward the SPAC. But so far, they are watching closely. But don't forget, it's another kind of competition globally. Amsterdam and also UK already have the SPAC listing, experiences. And Singapore and Hong Kong are also, going to have SPACs. So in order to keep US SPACs competitive, they may not take very, strict actions or measures toward a SPAC, but it really depends. So it's very dynamic. I cannot say.
Yes. Regulation is evolving as experiences are built on the SPAC. Thank you for that. Okay, we'll make this crisp, short and sweet responses, so that because we don't have too much time left. Okay, the next one is, stock exchanges have very strict requirements for companies that will list. Do target companies have to meet these requirements? I guess post-listing, once you're listed, then you fall under the regulations, both of the exchange, which typically are self-regulating organizations, as well as of the Securities and Exchange Commission. Is that correct to say? You get listed, whether it's IPO or SPAC or shell, but once you're listed, you're subject to whatever regulations are imposed on listed companies. Okay. Next one, how
sorry,
go ahead,
allow me
David.
to supplement a little bit. I think the question is about, whether the target company before the acquisition needs to meet these requirements, and the answer is no.
No, correct.
So that's why, go through SPAC listing, the information disclosure, the requirements are lower, and why their SPACs are welcome, for those unlisted companies. That's the
and answer. You did present that in one of your slides when you made the distinction among becoming public via IPO, via SPAC, or via acquisition of a shell company. Okay. Next one, how are SPACs being regulated? What agencies and regulatory laws and rules govern them? Can we say it's the Securities and Exchange Commission or its counterpart in whichever host country? Correct?
Yes.
Okay, and then of course the exchange, which would have its own rules. Okay, that answers it, Bea Romualdo. Okay, is the 2% the base profit of the sponsor? This is asked by Ana Di Magiba. Would it be higher depending on the amount of investment of said sponsor? I think Billy, you mentioned this, the 2% share of the sponsor.
Nominal. I didn't get it.
Okay, you mentioned the question is the 2% the base profit of the sponsor? Would it be higher depending on the amount of investment of the said sponsor?
That's his,
perhaps you can elaborate on the 2%.
That's his initial. As a sponsor, he's limited to 2%. Yes, the rest could go to the others. But the
value of the 2% of obviously rises as the value of the company increases.
Especially if they do their job well, they have a good target. Fantastic, they will make a lot of money. And you've seen Virgin Galactic, Draki, Nikola.
That's the poster boy for SPACs, right?
Yes, the three.
But you can also have the Nikola and the others where, you know, the pendulum swings the other way.
But of course, there are other problems, like I could not recall there's this mining company or there's a SPAC targeting to do some mining under the sea. Now it's encountering big problem because one of the big sponsors wanted to pull out. They have not yet.
Could be. I guess it could be a problem of technology. It could be a problem of markets, etc. Okay, here's another question. What are the basic pros and cons of using SPAC as a way to facilitate entry to the capital markets? How do we de-risk associated risks on the use of this vehicle? It's not as easy as there are stringent requirements, IE, PCOAB audits, etc. Maybe David, very quickly, you already mentioned the pros and cons of SPAC. Maybe you can just reiterate them and address the questions of this registrant.
Okay, the pros, you know, as I mentioned, you know, the quicker, and also the costs are much lower, and also you know, those are the pros, and for certain countries they have very strict, you know, requirement for listing, such as the number of IPOs in a certain year. For those countries, you know, it's easier to go listing through the SPAC overseas. So those are the pros. But the cons, you know, is again the disclosure issue and the corporate governance issue, and I mean the investors should be very aware of.
Okay, thank you for that. Okay, there's another one here. How different is a SPAC investor from an investor in a non-SPAC company? What sort of timeline are they looking at for the target company to attain profitability? I guess this is, I guess it's making reference to those target companies that have yet to make money. Who wants to answer this? David?
You're taking a bet on when you put your money also in the SPAC, but you're taking a bet that
it's really a bet. Yes,
will do their jobs. I'm sure it's a target company. So any fact in the American exchange, in the American stock exchange, they require a lot of information before they give the go signal. You have to comply with certain accounting requirements, certain committees to be put up before they let you go on looking for investors as a SPAC to go on targeting companies. But they will target good companies that have big potential normally.
We do have a few more, but we are pressed for time. What we will try to do is, for the questions that have not been addressed, we'll try and make this available to our speakers and maybe get them to respond to them. And we will forward the responses to our attendees. I guess that's a fair alternative given our limitation of time. So we're down to our last minute or so. The issue about SPAC that is raised is that this is a product of the liquidity in the market. A lot of money is sloshing in the system, and the question of what happens when the era of cheap and easy money disappears. So I go back to the first question I raised in my introductory part, and I asked whether SPACs are a fad, a mania, a result of a liquidity, a flush with cash liquid market, whether the luster will disappear when that liquidity disappears, or whether this is the wave of the future. Let me start with Billy, and then David and Duke. Short and sweet.
Certainly, the big thing about SPAC is that now some investors, both individual as well as institutional, can easily get listed via SPAC because cheaper, easier, faster, but of course with all the regulations. And judging from the numbers, you know, this is started way back something like 2003, but over the past couple of years, starting 2014 up to now, the trajectory is going up. The volume is going up in terms of amount raised, as well as, I'm talking about the American market, as well as the number of SPACs that have come up. In fact, in the first month of this year, 75 SPACs came into the market.
Mm-hmm.
So that's the trend. So after this couple of years, it's no longer a flash in the pan or something, but I'm sure it's going to be mainstream in due time.
So your answer is it is the wave of the future. And David?
Well, my answer is mixed. I mean, as you mentioned, SPAC right now is promoted by the liquidity. So when the liquidity is gone, I think the heat of SPAC will also go away. And again, I mean, in the market where in a bull market, when too much money chasing for few targets, that's why SPAC is popular. But I think again, disclosure issue, the corporate governance will be very important when you evaluate the SPAC. And so do be very careful about SPAC.
Mm-hmm. Mm-hmm.
And there are several ways.
With some caution. Okay.
Yeah, there are several ways. Go for listing. SPAC is only one of them. Others including direct IPO or buying shares. And is, as I mentioned, it's like a wedding or it's not to find the best one, but to find the most suitable one for you.
Yes. Thank you for that. And Duke, your final words?
I do agree with with what David said. With the increased level of regulation for SPAC, I think compliance and disclosure is an issue. And for Vietnam, I think it takes some time for us to wait and see for how the company will respond with the new regulating rule from the developed market like US or Singapore or Hong Kong. Because now it's just a few Vietnamese companies consider SPAC like in the pipeline. But I think the key issue is how they can be well prepared and ready for the post-closing for listing. That means corporate governance, compliance, reporting and disclosure requirement. But I don't think that is SPAC is an easy game for the company for fundraising. Maybe at first they think that, but later on they can face a lot of challenges and increase the cost of running business and meeting the compliance and disclosure requirement and corporate governance later on. Yeah. Thank you.
Thank you very much, gentlemen. That was a very informative and enlightening conversation with you. I guess the key takeaway here is that whether you're a sponsor, whether you're an investor or a target company, approach it with discipline. It requires a proper professional approach to the vehicle, whether you're coming in as an investor or whether you're being acquired or whether you're out there promoting it. So thank you very much, gentlemen, and I believe we're on to the next part of this morning's program. Thank you.
Thank you.
Thank you, Attorney Cortez, Mr. Chow, Mr. Dang, and Ms. Cristobal for that informative open forum. May I now call back Mr. Manari for the awarding of the tokens of appreciation.
Thank you to our speakers. It was very truly the interesting and engaging discussion. At this point, we will be presenting the certificate of appreciation to our speakers. The Cambodian Association of Chief Financial Officers, China Association of Chief Financial Officers, Financial Executives Institute of Chinese Taiwan, Indonesia Financial Executives Association, Japan Association for Chief Financial Officers, Financial Executives Institute of the Philippines, and Vietnam Chief Financial Officers Club presents this certificate of appreciation to our speakers. When I announce their names, please join me to give them big hands. First, Mr. Alberto Cortez. Next, Mr. David Chow. Next, Mr. Dr. Dam.
Thank you.
And to our moderator for today's webinar, Ms. Malo Cristobal. In recognition of their generosity in sharing their valuable time, knowledge, and insight during the webinar entitled Special Purpose Acquisition Company, SPAC, webinar given this 17th day of September 2021 via Zoom, signed by the leaders of each Asia member institute and including myself as the area president for Asia, IAFEI. Likewise, to those who would like to receive copies of their certificate of attendance with sample as shown on screen, you may reach out to the IAFEI secretaries so they can send the digital copies through email. Again, my sincerest thanks to all of you. Thank you.
Thank you.
Once again, thank you, Mr. Manari. I would now like to call on the Vice President and Professional Council Chairman of CFO Vietnam, Mr. Dong Hai, for his closing remarks.
Dear fellow members, colleagues and friends from our Asian member institutes of IAFEI. Good morning, good afternoon, good evening, depending on where you are on Earth at the moment. The preceding presentations and exchange of views brought us to a new learnings of the Special Purpose Acquisition Company, or SPAC. Indeed, it's relatively development of the capital market in this century. On behalf of the IAFEI Asians region, I would like to express my profound gratitude to lawyer, Mr. Abelardo Cortez of FINEX of the Philippines for discussing the fundamentals of SPAC and how it benefits the capital market. Lawyer, Mr. Duc Thế Duc, the Vietnam CFO, for sharing with us his experience on SPAC, the considerations and the challenges, as well as the upside. Business leader, Mr. David Cho, of Financial Executive Institute of Chinese Taiwan, for imparting his global SPAC transaction experience and stories behind them. Investment banker, Ms. Malu Cristobal of FINEX of the Philippines, for ably moderating the open forum and the Q&A session and actively engaging our speakers and participants. We hope that the discussion provided us with the wider perspective on the hot topic and will further spur interest to consider SPAC as an alternative investment vehicle for the development of our region's capital market. Thank you very much.
Thank you, Mr. Hai. We would like to thank everyone for attending the Special Purpose Acquisition Company webinar. Keep safe, everyone.
Thanks to all for generously sharing your experience and your time. I'll try and summarize or put together the questions that were not responded to and forward them to you. So hopefully we can then accommodate the interest of our attendees. So thank you all. Have a good day or evening, whichever part of the world you're in. Bye-bye. Stay safe.
Well, I would like to thank all. You did very, very well. And for an initial offering of the regional CFOs, I believe this is a success. What happened is a big success. And we are planning more